Now, we are presenting with Dr. Issy Bacher today, who is actually a longtime partner of ours. He was a full-time professional analyst, initially concentrated on the gold market and appeared on TV, radio, and in the press in South Africa. He authored Olby Investment and Gold newsletter and was invited to speak on gold and cycles at the Money Show in Las Vegas and by Bill Bonner of Agora in London. Now, and you guys can follow along with the rest of that description, but just a little bit about Issy from my personal experience. His add-on, the CycleTrends add-on, has been one of our most successful add-ons and actually one of our favorites here at Metastock. Has some very powerful indicators within it, and what he'll be doing is kind of covering some of the ins and outs and the ideas behind cycle analysis and actually how to utilize those ideas within Metastock. And he has some great examples prepared for us today. So what I'm going to do now is actually turn the time over to Dr. Issy Bacher, and he will be going through his presentation, and then I'll add a few notes here towards the end. And if you have any questions, I will be on this entire time answering questions that you might have. So please feel free to ask those. So if you give me just a moment, I'm going to turn the time over to Dr. Issy Bacher.
Right. Thank you, Hunter. Thank you for the introduction. I'm going to deal with this through a PowerPoint and go through showing you the theory and the techniques of using cycle analysis to trade the stock markets. And then I will be showing you at the end, I'll be showing you some very pertinent examples, especially specific to what has happened to the market this week with the collapse of world markets and the S&P 500 in particular. So, as you can see, my name is Issy Bacher, Dr. Issy Bacher. I am the developer of the CycleTrends stock market program. I am proud to announce that the CycleTrends software program is now an add-on to the internationally renowned Metastock technical analysis program. We've actually been there for a year or so, and this program is known as CT+. Let me deal with the history of cycle analysis. Let me go back a bit. The origin of the theory of business cycles can be traced back to a Swiss historian in the 1800s, and the most famous of them were Kondratieff, who had a 54-year cycle, which of course you can't trade with market on the basis of a 54-year cycle. But what is very interesting is that the actual trading of financial securities with the aid of cycles began in the 1800s, and it was used by the most financially powerful family in Europe, the Rothschild bankers, who traded agricultural products, British interest rates and bonds with tremendous success. But they used scores of accountants to do this. And of course, this is laborious work. And now with computers, we can plot cycles now in a split second. No, it's not going. It's not going, I'm sorry.
Just click on the screen and you should be able to go to the next slide.
Okay, just click on the screen. All right, sorry about that. To get to the present, in 1940, E.R. Dewey in America set up the foundation for the study of cycles in Pittsburgh. And the original program of CycleTrends, who was working for a mining company and whose job was to forecast the metals, he was using technical analysis. They found it wasn't good enough, and they sent him to the foundation in Pittsburgh, and he came back with a cycle program, and I got together with him to develop the cycle trends program that we see at present. So to get back to what the program is all about, the study of market cycles is the most important part of the cycle trends program. Of course, when you learn to read cycles, you'll know what the market's going to do, and of course, if you know this, you're going to make money. So let's talk about the characteristics of a cycle. Cycles tend to move from a low point to a high point. I'll show you a graph now, and back to a low point in different time spans. And these cycles repeat themselves. And what the program can do, it identifies the ones that have been repeating themselves and then uses them for prediction. It's pretty straightforward and logical. The theory is if the cycles have been repeating themselves in the past, they'll keep doing so and can therefore be used for prediction. So what the program does, it finds the cycles that have been repeating themselves, and the more they repeat themselves, the more reliable they are. So they must be repeating themselves consistently and persistently before they can be used for forecasts. Here is a graph which explains how the cycles, what a cycle is. And I'm using the gold price, which I'm going to be using in this webinar, because the gold price is universal, and later on I'll be moving to the using the SP500. But so let's have a look at this graph. You can see from A that the start of a cycle goes to C, the top, to B, and that is called the period of the cycle. And you see this is a big period, and over here we have a smaller period, and here we have a medium period. So the periods of the cycles are very important. Now the other fact of the cycles is what's called the amplitude, and this is from C to D, and you get different amplitudes. So how does the program convert these irregular cycles of different periods into one regular cycle? And it does it in 3 stages. First, points out the cycles that have been repeating themselves. In stage 2, it develops, it works out which cycles are statistically reliable. And in stage 3, the Bartels test, that's a test that's developed by Julius Bartels in France. It tests which cycles can withstand sudden random disasters, or like a disaster like the collapse of the New York, in the disaster in New York. So out of these stages, what is developed is a cyclogram. So this cyclogram is developed from these 3 stages, and it gives the trader the option of using 3 cycle indicators in different combinations to forecast the trend of the stock. So what is the beauty of cycle trends is that there really is only 3 indicators going against the hundreds of indicators in other programs. And these 3 indicators are used in different combinations depending on the stage or the phase that the market is in. Now the three indicators used in the cycle analysis are the cycle indicator itself. Now I'm going to show you that in a graph. The cycle indicator what it does, it forecasts the future trend of the instrument that you are using. And have you got that? That is the future trend. The other indicator, cycle indicator down here, is called trending. And I'm going to show you that in a graph, how that works. And what Trendex does, it's based on the Fourier trend. What Trendex does, it forecasts the immediate trend. And the third indicator, which is very important, it's an overbought, oversold indicator called true OBOS. It tells you whether an instrument is in an overbought, oversold, or in a neutral phase. And basically, what's important is that to make a positive diagnosis, say, of an instrument going up, these three indicators must be confirming each other. So if going long, the cycle indicator should be showing a future trend upwards. The trigger indicator should be positive, and the overbought, oversold indicator should be in an oversold area, not overbought. And if you're going short, it would be the opposite. The cycle indicator should be pointing downwards, the future trend. The trigger indicator should be negative, and the overbought, oversold indicator should be in an overbought area. Let me explain this in a graph. Here is a graph of the gold PM price, which demonstrates the indicators of one of the templates which I'm going to be showing you, or it's called the classic template. But let's have a look at these indicators. As I said, there are only three indicators that you've got to use, which is the beauty of the whole program, which is used in different combinations, depending on the phase of the market. So we look at here, as soon as you open up a graph, it defaults to these four boxes. Box 1, box 2, box 3, box 4. In the first box, we have the cycles. As I said, the cycles tell you the future trend. Now, if you have a look at this, this is called a cycle curve. And then there's a vertical line. So that differentiates the future from the past. So these are the cycles that have been repeating themselves, and the program is amalgamated into cycle curve. And what you're really interested in at this point X is what is the future projection of the instrument, in this case the gold price. So the future projection here you can see is downwards. In box 2 we have the Trendex indicator. Now, as I explained, Trendex is developed from this Fourier line here that you see in the gold price. Trendex 36 is actually 36 cycles in this Fourier line, and Trendex forecasts the immediate trend. Well, not doesn't forecast, it tells you what the immediate trend is. And it's a very simple indicator. You have this line that has zero, line through zero, and as the Trendex line goes through zero, it goes into a positive mode. So at this point in time, the immediate trend of the gold price is positive. If it was down here, it would be negative. Then we look at the overbought, oversold indicator, and this is also a pretty simple indicator. It's based on how far the price is from the Fourier line, and it is getting here, after the red line would be, it would be meaning that it is overbought, and if it was the green line, here it would be oversold. As you can see here, what's actually is getting to be overbought. So if you look at the indication you as a trader would make, looking at the gold price, what you've been seeing here is that at this point here, we have the gold price actually, and this is the Fourier line, which is very important. The gold price at this point is at 1365. The immediate trend over here was positive. However, if you looked at the cycles, it would tell you that it looks like it's going to turn negative, or the trend is going to go down in the future, which is exactly what happened. So that basically is the way you look at you look at these three indicators, which are in different combinations. So let's go now. Let's go further. So let's go through what I tried to tell you was that to give a positive or bicycle, there must be confirmation by the indicators. Cycles that are pointing up, there the trend. Cycles must be to be positive to go long. The cycles must be pointing up. Trending must be positive, that's immediate trend. And through OBOS, that's overbought, oversold indicator, should be in the oversold zone. And if you were going short, the cycles should be moving downwards, trending should be negative, and true OBS should be overbought. Okay. So the program puts these indicators in different combinations, and there are 5 templates. So these 5 templates give the trader a choice in deciding which template to use. And there must be confirmation between the indicators to get a positive or negative signal. If not, you look at the expert advisor, and if they don't agree, the expert advisor will say the cycle trend system is not giving a confirmed signal. Right, now let's have a look at these different templates. The one you get, one that I've just showed you is called CT Classic. We won't deal with that again. But the 2 important ones are called Cycle Trendex and Trendex. These are the 2 main templates used by traders. Maximus is used by Forex traders, and this cycle BOS, that's another template, is only used when the market is really overbought or oversold. So let's go to the cycle Trendex template. Right, now we're going to use the cycle Trendex template. Okay, the cycle Trendex template is used when you are anticipating a reversal in the trend. For instance, at the moment the SP 500 are plunging, and the cycle Trendex template, which I'll show you, showed you the forecast. And if you were looking for the SP 500 to turn around, you would use the cycle Trendex template. And it's a pretty simple one. It consists of 3 indicators. It consists of the cycle trig, the cycles itself, and as you can see here, we're looking at the gold price again. At point X, what it's saying is that that the gold price future projection is downwards. Okay. Now it has 2 trending indicators. Trending 55 is a FOST. It's a FOST trigger, what you call it a trigger, and trending 36 is a medium speed trigger. And these 2 trendings should be in the same mode to confirm each other. And over here you can see the trending 55 has gone positive, it's in a positive mode, and trending 36 is also positive. However, even though the immediate trend is positive over here, you can see that the gold price is starting to turn around, and the cycle Trendex, the cycle trig, is telling you that the future projection is downwards. So the expert advisor would say that there is no signal, and you as a trader would be very careful, or would be taking a position that the gold price was going to turn down, and what you would do then is you would wait for one of the Trendex to turn downwards, and you would go short on the gold price. It's as simple as that. So that is the cycle Trendex template. Now the other template that is very, very useful, especially now that the market is falling, is called the Trendex template. And it's called the Trendex template because it consists of only the Trendex. So it doesn't have the cycles in it, the cycle indicator. It's only having it shows you what the immediate trend is, and it uses 3 different speeds of Trendex. So you can see the boxes here. Box 1 has Trendex 55, that's a fast speed. Trendex 36 in box 2, and Trendex 21 in box 3. 21 is the slow speed Trendex. Okay. So the way this is used is quite simple. It's probably one of the greatest indicators telling you when to take a profit. That's its real function. Is it shows you what the immediate trend is, but it also tells you when you should take a profit. And this is how it works. You can see here that the Trendex 55 is positive. Trendex 36 is positive. Trendex 21 is positive. However, so that's what it's saying to you, is that the immediate trend is positive. So how would you know then when to take a profit? You're in the gold price and it's going up. Okay. What you would do then is you watch one of the Trendex to turn down, usually the fast Trendex. And we'll see that in the SP500 just now, that this Trendex 55, as soon as it turned down, goes from positive to negative, it would tell you straight away, take a profit and get out of it, get it, and close your position. It's as simple as that. So the way I usually use it in trading is that as soon as this Trendex moves down, I will take a third of my profits, and if another Trendex moves down, I would get out of close my position completely. So to sum up, all 3 must be in the same zone, positive or negative, to show the immediate trend. And the function is to show when profits should be taken after a strong trend has been established. And this, I would say, this template gives a 90% successful result. We now go to the other template, the Maximus template. Now the Maximus template is really only used for Forex trading, and it should be used when there is live currency data coming in. And this example actually is on a daily price, so it's not really, but I just want to show you how it works. The Maximus has all the indicators, a lot. It has the cycle streak, it has the overbought, oversold, and it has the 3 indicators, the 3 Trendex. And in this example, we are looking at the euro-dollar price. Now, this is not really a good example because all the indicators don't agree with each other. For instance, the cycle trig is going sideways, and the overbought, oversold is at neutral. And the Trendex 36, this one is negative, but 55 is positive, and 21 is positive as well. So you would do nothing here at all. There's no, for you to trade Forex with the Maximus template, all the indicators, if going long, they must be moving together positive, or if you're going short, they should be moving negative. But as I said, Maximus is used when the data coming in is live, and you use it not on a daily basis, but you use it in periods of 15 minutes or 5 minutes. Okay, so let's carry on now. The last template that we use, it's not very used because you only use the the cycled OBS template when the market is really plunging to an oversold area or moving up to an overbought area. And it only consists of two indicators, again, the cycles. I'm looking at the gold price again, the cycles itself, and the overbought, oversold. So over here, actually, the indication here is that the gold price is going to come down, which it did do. Because you can see what the cycles are. Cycles is down, and it's getting to the overbought area. And that's exactly what happened, is that the gold price fell from 1375 downwards. But as I say, this template is not used as such. The two templates that we really look at are the cycle Trendex template, which I'm going to show you in examples, and the Trendex template. So let's carry on. So this is the conclusion that I want people to understand. There are different templates that the trader can use in making a trading decision, and this depends on the phase of the market. If the instrument is in a strong trend, the Trendex template is used to signal when profits should be taken. If the trader is looking for a reversal in trend, then the cycle Trendex template would be the choice. And if the instrument was approaching overbought or oversold levels, then templates with the overbought, oversold indicator would be considered. Now, we've had cycle trends add-on have been going for quite a long time, and what confuses a lot of our clients is, why do the signals actually change? Why, for instance, on the 1st of July, you could see a signal that says positive, and this could disappear or change at a further date. And the reason that happens is because the cycles are recalculated with every data input. So if you went back to the 1st of July, for instance, and you were able to cut off the prices, you'll see that the original signal was there. So that the original signal will still be there. So it does change because the data, with every data, the signals are recalculated. But if you go back to the original signal, you cut off the prices there, you'll see that that signal is valid. And as a result of this, what we tell people is that the only thing that counts in your decision making is the signal that you are currently seeing. You do not worry what happened before. Okay, you've got to look at what is happening at the moment. I'm going to show you now a couple of examples. So, as I said before, the two templates which give excellent trading signals are the cycle Trendex and the Trendex templates. And to tell you again, the cycle Trendex, the main function is to signal a change in trend that has taken place and is likely to persist. That's important. And the Trendex template is used to monitor an established trend and signal when profits can be taken. So I'm going to show you a couple of examples based on these two templates. Yeah, so let's have a look at the SP and S&P 500 example. This was taken on the 15th of May when it was trading at 2080. Okay, let's have a look at this now. You can see an actual trading example. Let's have a look at the cycles. What is the cycle showing? You go to the vertical line. This from here is the past. From here is the future trend. And you can see quite plainly that the future trend is down. Then we look at the two trending indicators, which tell you what the immediate trend is. And you can see what's happened. It's gone down from positive here to 0 to negative. So that's the 55. The trend, the immediate trend is negative. And the 36, likewise, has gone from positive through 0 to negative, so it's also negative. So therefore, the expert advisor, you would say, if you need to look at the expert advisor, this cycle trend system is giving you a confirmed negative or sell signal at this time. So here's the expert advisor. The way you get it, as all your Metastock users know, you just click on this little man here, and then you click on commentary. So at this point here, you can see that we're looking at the SP500 here at 2080 on the May the 6th, 2015, that it has come to the Fourier line. Now this Fourier line is terribly important because a lot of changes take place at this Fourier line. And if it goes through the Fourier line, it's very, very negative. So let's see what happened. Let's go to the next slide. See what the result is. Right, you can see what the result is, that on July the 9th, the SP500 fell to 2046. So it fell from 2046, and here you can see that is below the Fourier line. And over here, what we've used now, we've switched, because the trend is negative, we've switched from the cycle Trendex template to the Trendex template. You can see the Trendex template, which consists of 3 Trendex, and the 3 Trendex indicators are all negative. So at this point in time, you would be short of the SP500, and you would be waiting for a reversal in the Trendex. For instance, you would say you were short of the SP500, you would wait for this Trendex 55 to go through into positive for you to cut your position. Let's go on a little bit further. Let's have a look at, you see the market is very, very volatile in July. So I'm looking at the SP500 again, and it turned and it went to 2126 on July the 20th. And you can see what has happened. It's gone up towards the Fourier line. Now that's very important. What will always happen is that eventually it falls through the Fourier line. It will always go back to the Fourier line. So yeah, it's gone back to the Fourier line. We've used the Trendex template, and you can see that the Trendex template now 55 is positive, 36 is positive, and 21 is positive. So you are now long of the SP500. The trend is up, and you would want to know when do you take your profit, when do you cut your position. And the way you would do it then is to watch the Trendex for one of the Trendex to turn downwards. So let's go to the next slide. And you can see what actually happened here is that we're now looking at the 55 Trendex. The 55 Trendex went through 0 from positive to negative, and this was a strong indication for you to cut your position in the SP500. Possibly only cut a third of your position, and then if the other 36 and 21 went negative as well, cut the lot. So the Trendex template shows how it is used to signal profit taking when one of the Trendex changes its mode from positive to negative. Let's see what happened. Yeah, let's see what happened on the 24th of July. The SP500 had dropped to 2102. And you can see here what's happened to the 3 Trendex. The Trendex have now gone from positive through 0 into negative, positive through 0 into negative here, and you can see that it's coming, that the SP500 is going negative. What's quite significant is that this Fourier line, which is similar to a moving average but much more accurate, you can see that the Fourier line, which shows you the trend from here to going upwards, you can see that the trend is starting to turn. And so you always watch the Fourier line, and we'll see what actually happened last week or this week. I'm going to use now Walmart as an example, and here I'm using the cycle Trendex template. Now we look at the cycles. Here's the cycles curve. Here's the vertical line, and you can see in the future, that's the future, from there is the past. You can see that it is negative, that the future trend is negative. We're looking at the cycle Trendex template, which uses cycles and two Trendex. And if you look at the two Trendex, you can see that this 55 Trendex is in negative mode, it's below the 0, and the 36 is below the 0, negative. So the expert advisor, you click on the expert advisor, and it will tell you that this cycle trend system is giving a confirmed negative signal at this point in time. And the Walmart was trading at 77.84 on April the 29th when this was taken. Let's go to the next slide and see what happened. We're using the cycle Trendex template again with Walmart. And on July the 7th, it has dropped to 72.4 from 77.84, confirming the cycle Trendex forecast on April 29th, when it was 77.84. So you can see what here, the cycle's negative, the Trendex are negative, and Walmart has dropped to the Fourier line. And it'll always hesitate at the Fourier line. So if you were short, of Walmart at any position here, as a trader, you cut your position as soon as it hits the Fourier line. That Fourier line is a tremendous trading indicator. Right, let's carry on a little bit. Let's just see what's happened in the last week. Last week, on August the 21st, and I'm using here the Trendex. Remember the Trendex, that the SP500 is now falling. So we switch to the Trendex template, and if we look at it here, we can see that the Trendex indicator 55 is below 0, negative. The 36 is below 0, negative, and 21 is below 0, is also negative. And you can see here that the SP500 has dropped right through the Fourier trend line, and as I said before, you can see that the Fourier trend line, which shows the trend, is starting to turn negative, giving a very strong indication that a bear market is starting in the SP500. So the expert advisor, as you can see here, would say this cycle trend system is giving a confirmed negative signal at this time. So that was on August the 21st. let's see what happened to Walmart on August the 21st. Walmart dropped right through the Fourier trend line to this position here to 67.33 and taking it below the Fourier trend line with the cycle Trendex template still in a negative mode. So Walmart has been a wonderful example of obeying the signals of the cycle Trendex and the Trendex. Here we have crash. I call this, that's on Tuesday, this Tuesday, crash. So look, this is a SP500 crash. Look what's happened to it. Remember I said, look, the Fourier trend is turning negative, and here, look, it's turned right negative there. Okay, and it's dropped right through the Fourier trend line. And if here I've used the cycle Trendex template to show you what's happening, you see it's gone right through the vertical line, and it's in the future, it's negative. But note here that it is reaching a cycle bottom. So one can start thinking of a possible turn in the forecast of the SP500. You also notice here that the trending is negative, negative, negative. Now, if you look at this chart now of the SP500, this is on Tuesday when the market crashed. You can do two things to tell you. It's reached a, if I drew a line here, it's reached a previous cycle bottom, not a cycle bottom, an actual price bottom, and it is unlikely to go through. And the other thing that you can say also is that it will always, if it crashes through the Fourier trend line, it will always revert back to it. So here it went through, gone through here, and the indication is that in a couple of weeks or the next week or so, it should retrace itself to the Fourier trend line. But of course, what you'll do is you'll watch the indicators, you'll watch for the cycles to bottom, and you'll watch for the Trendex to turn from negative through zero to positive, from negative through zero to positive, and as soon as it does that, you would go long of SP500. What you would probably also do is you would put on the Trendex template. Remember, the Trendex template consists of only 3 Trendex, and as soon as one of those Trendex turns from negative to positive, it would be a sign that there was going to be a bounce in the SP500. So those are the examples showing you how accurate these cycle indicators can be, these cycle templates, if used correctly. And I will invite questions here, but I want to say thank you for watching. And should you wish to get more info on the Cycle Trends Plus add-on, you can go to sales. But please contact me, Dr. Bacher, at isbacher@netactive.co.za, and I will be pleased to show you further examples and further information on what I consider probably the greatest, in my view, the greatest trading program available on the market. Thank you very much. I'll leave it to you, Hunter. Do you want to say anything?
Yes, Issy, and I appreciate that presentation, and what a great system it is. And I think that, you know, the value behind the system is it being such a complete system and so accurate with the different indicators that it comes with. And it's something that is not only very accurate, but also simple to use, because remember, with the Cycle Trends add-on within Metastock, along with all the other add-ons, comes with the Expert Advisor. The Cycle Trends Expert Advisor is very, very specific. So in other words, you don't have to go back and keep watching this webinar over and over again to remember exactly how it works. You have the ability to attach that commentary, and it will actually walk you through the signals and the definitions of these different indicators. And with any questions about the methodology behind it, please feel free to contact Dr. Issy Bacher with this. Also, what we wanted to do for this is, actually do a little bit of a promotion for this event. Now, normally the Cycle Trends add-on is $4.99. For those of you who registered and watched this event, we are going to be doing a special price where we'll go ahead and take $100 off. Now, in order to take advantage of that promotion, please give us a call at 1-800-882-3040, or you can use our chat function. Just go to metastock.com/sales chat with any questions about the program and ease of use, etc. We'll stay on here for another minute or so and answer any questions that you may have. And please feel free to contact us afterwards, either via phone or chat, and we'd be happy to assist you with this. Again, thank you, Dr. Issy Bacher, for presenting this today and putting this system together for us. Thank you for attending the webinar today, guys, and as always, happy trading.